Okay, guys, let me break down this trade I took on EURUSD, and it was a bearish trade, right? My idea coming to the week was that EURUSD was going to be bearish because we just tapped into a daily fair value gap, and that was coming from a bearish trend. So I thought that the trend is going to continue downwards. However, the whole week stalled. Monday, Tuesday were all holidays. Wednesday was CPI. Thursday, which is the 11th of June, where this trade was taken, was then the trade opportunity. So I saw that price was forming a lot of sell liquidity below the whole zones. The break of structures were not really clean. But however, I just saw a 1 hour order block after a not so clean break of structure, and then I took my entry out there. Price tapped it, was a sniper entry, broke below. Then I changed my target, which was initially 3 arrow. I was targeting the lows of the whole move. I changed it to 2 arrow. So price during the New York session on Thursday swept out the short-term high, which was my snapper entry initially, broke below. It didn't break structure fully, but it left a fair value gap. Came back to that fair value gap. I took on that position, so I was risking 2% on two trades, right? I reduced the stop loss from the first position to that of the second position. So it was just basically about, let me say, 1 point something, maybe 1.03% risk. And I targeted 2 arrow on both positions. So that was 4 arrow. Price then dropped down to the 4 arrow. And after I tapped a little weak at the bottom, okay, on the 5 minute time frame, it was another block, and it looked very clean for 5 minute time frame, but I didn't see that at the time because I was targeting that zone. Price then reversed very fast, took out all the sellers, right? But I was already out of the market with my 4 arrow, and it was a very beautiful trade.